Hello, this is Trading with Confidence, and I'm John Breland. So today we're going to talk about trading realities. There's a lot of deceptions in the market, and it causes new traders to run into a lot of problems. And I'll be talking about those deceptions. I'm going to be talking about money and how to think of money as a trader. I'm also going to talk about how trends are determined in the market. And lastly, I'm going to talk about what successful traders do to make money in the market. So this is a beginner's video. So without further ado, let's get started. So the first thing that I want to say that most traders lose money. Go to a Cointelegraph article talks about day trading Bitcoin and that why 95% of traders lose money, fail. So here's a list of statistics. 80% of all day traders quit within the first 2 years. 40% of day traders only last 1 month. 13% continue to day trade after within 3 years, and after 5 years, only 7% remain. And the average individual investor underperforms the market by 1.5% per year. Active traders underperform by 6.5% annually. And traders with up to 10 years negative track record continue to trade. So if trading is this place where you make magical money, millions of dollars, why are these the actual statistics? Well, one of the major reasons, as the article says, is that people underestimate the psychological challenges of trading and fail to eliminate emotion from their trades. So trading is an emotional experience for sure. You're dealing with money, but trade properly, you need to have a system, and you need to stick with your system. This is the main reason why most people fail, and it is the reason why I do not fail, because I have a good system. So to get to the core of the market and what's happening in the market, you have to understand that the market is all about fear, greed, and not knowing the future. So every participant in the market is there to make money. They're there to take your money, and you are there to take their money. And that's it. There's no service being provided to anybody unless you consider service to be teaching somebody the realities of the market by taking their money. I mean, that could be considered a service, but it's not like getting paid for something that you do for them on a personal level. So there's no satisfaction necessarily from serving people, yet the allure of making millions of dollars is there. So likewise, as you trade more and more, the more humble you will likely become. And I kind of like to think of it as there's no way to win in the market, and that's, don't get me wrong. Let me explain what I'm trying to say here. So if you take a trade, let's say you take a trade, you go long up here, and the market starts to go down on you, right? Like that. And you say, I give up, this trade is not working, and you get out. You've lost money. That's one way of losing money. Okay? Let's say you're right here and you say, well, last time I traded, I lost money, so I'm going to stay out for a while. I'm going to kind of like catch my breath. And you see the market move all the way up here. That's opportunity lost. By not taking a trade when it was right to take a trade, you've lost money. And the third way you can lose is by, let's say you did take this trade, but you only put $100 into this trade. So when the market moved up double, you made $100, and you're thinking, oh, if I only put 1,000 in, if I only put 10,000, I'd have $10,000. So you lost out on what could have been. The market will not make you happy. It will not make you happy unless you just suddenly get this sudden windfall that you didn't expect or something. So the to have the right mind of a trader, all those things just should not matter. It really shouldn't. If you lose money in the market, it should not matter. If you miss a trade, it should not matter. If you didn't put enough money in when it was a really good trade, it should not matter. If you can get to that point as a trader, you've taken a huge psychological step in your favor. So that's something I really want to point out, that new traders just don't have that. That's something that's not developed. It's a skill. It's a learning. It's an experience. But that ultimately is where you have to be a good trader. In a sense, it's like money. It's like money has to be important, and money is important, but it has to be important and not important at the same time. So if money were just not important at all, it would be so easy to take a trade because it wouldn't matter. Nothing would matter. But you have to act in the market as if it didn't matter, because you have to when you see your trade, you have to take it. And sometimes it's a good idea to put a lot of money in, and it should not matter to you if you actually lose it. So that's the conundrum that a lot of new traders find themselves in, and that's like a huge learning curve. And the learning curve is not necessarily technical; it's emotional. It helps a lot if you have a backup source of income, or if your family has a lot of money or something like that to back you up if something goes wrong, or or another way of looking at it is, if you have a certain amount of money and you know how much you're willing to lose, then you can take a portion of that money and trade only with that portion. So let's say you have $100,000 and you say, well, I need that $100,000 for whatever it is, retirement or college or whatever it is. But I need really more like $90,000 for my dream to come true in that area, right? So then you have an extra $10,000 or so that you can play with. And if you were to lose it, it really wouldn't make that big of a deal. It'd be kind of hard to lose that money, but it wouldn't be that big. It's not going to change your life entirely. And the nice thing about crypto trading is that you don't really need a lot of money to learn how to trade. The thing is, the more money you put in, the more attention you pay to your trade. So another thing is with paper trading, I paper traded for probably 2 years, and so it's kind of a process that you kind of have to do in the very beginning, because you don't know what the heck you're doing unless you have a good instructor. And in my case, I can save you years of paper trading, because I can show you exactly what to do in the markets and how to trade them. There's one thing that I want to talk about, and it's kind of a myth, and it makes me think that it's kind of another deception. So, and this is very important to get, and this is why I'm going to talk about it. So, there's a saying in the markets: trend is your friend. But what I want to do right now is to have you look at the market and tell me what the trend is at any particular time. Okay, so we're going to run this exercise. Okay, so here we have a situation where we see the market going parabolic. And imagine that you were new to trading, and all your friends are telling you have to get into Bitcoin, and then you see something like this. This is an irresistible buy point, because you see the market just shooting up straight. All you can think of when you're seeing something like this is that it's just going to go straight up and you're going to make money super fast, right? I mean, look at that. Look at the speed of this thing. So if you get in within 3 or 4 days, you probably made $10,000 something. You know? So it's, trust me, this is a point of high enthusiasm in the market. And so it sucks in a lot of new traders. Well, let's see what happens here. Step forward a couple days. Let's go. Go. Uh-oh. Now at 38, we were at 40. Uh-oh, we're now at 35. Went all the way down to 32. We were at 40. What's going on here? Oh, thank God. Now we're going to go back up again. For sure. Oh, okay. Ooh, I'm back to normal again. Whoa, what's going on? Uh-oh. This is going to go up? It's supposed to go up. It's supposed to go up. Boom. So, what's the new trader thinking right now? Man, this is a lot harder than I thought. And whatever happens, the trend is your friend. The trend was supposed to be my friend. But look what happened. I bought at 40. Now it's at 30 and some odd. That's not good. Okay. So now we've lost our 30%. Sorry, our 25%. And so now which way is the trend? Well, it's gone up here. It's gone up. It's gone up. But now it seems to be trending down. Are we at one of those places where it's just going to go all the way back down here? I don't know. I think I better sell this thing. Maybe I can sell it short and make some money on the way back down here. All right, let's see what happens. I was right. Oh, no. What's going on? Oh, no. Oh, no. All right. Okay. Now we're here. And yeah, okay, the market went down here and I sold, but I had no idea this thing was going to go back up again. But now, look at this. Okay, the trend is your friend for sure. For sure the trend is up now. I mean, it's proved it, right? The market's proved that it's up now. So, let's go ahead and buy. Oh no. Oh no. Oh no! So now which way is the trend? Is it up here? Or is it now down? Well, okay. Well, I got burned here. But last time it went up, but this time may be different. Right? I mean, it looks like it tried to go up, went down, it tried to go up again, and and that must be it. It must be down from here because this is moving down, and no, I don't know, but it's up here. But it's, it looks like it could be topping out. Probably topping out. I think I should sell. I think I should sell. Let's see. What? What? Up some more? What? Okay, here we are again. Yeah, I got whipped around here, and I've given up for a while because I just can't tell where this market is going. But you know what? Again, the trend is, I thought that they always say trend is your friend. Look at this. For sure, yeah, we got whipped down, but the market still keeps going. I think that even if I get whipped down, I think what I'll do this time is I'll let it whip down, then I'll buy the low, and then I'll hold it to have it go up higher. Let's see what's going on here. Aha, came down. Look at that. Oh, definitely, I'm going to buy because all the time that it's whipped down like that, hey, they just went right back up again. All right, let's go. Let's buy this sucker. Yeah, definitely. Oh, yeah, it's going to go higher. New high, new high, new high. What? 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 You get it? Whatever happened to the trend is your friend? The trend of your friend is BS, man. I'm losing money. This is crazy. What am I doing here? This is the experience of a new trader. They look at the price of the market, and it looks like it's going to continue on, like, it has momentum like a train, and they try to go along with that. And this is what happens to them. So I've been there. A lot of people have been there. This is why 70% of traders lose money. Like, how do you know this is, this downturn took however many days, probably about 2 weeks or so. This whole downturn took probably a whole month. Why didn't this one take a month? This one take a month. It only took a week, but now it's taken a month. So I mean, the market's constantly changing on you, right? I mean, to a new trader, it becomes impossible to trade. It's like it's so schizophrenic. But yet, there are traders who make money, right? So I mean, that's the learning experience. How do you really make it work? How do you have to think? So there's a very interesting chart that I want to show you. It's called the Wall Street cheat sheet. Now, the Wall Street cheat sheet is kind of a funny way to put the psychology of the markets into one graph. As you can see that this is the Wall Street cheat sheet. You can see that in the beginning, as the market starts to rally, there's disbelief. There's as it starts to rally more, there's hope, and as it starts to rally even more, there's belief in it, and there's optimism. And as the rally continues to thrill, and then euphoria. So euphoria is always recognizable. When you hear people talking about the markets, and they all think they're going to be rich. We're likely very near a top. So the reason for this is because everybody is euphoric. Everybody being euphoric, it all builds upon each other. It's like this group foolishness, for lack of a better way to say it. It's like if that person is euphoric, then I should be euphoric. And if I'm euphoric, then another person is going to make another person euphoric. And everybody's euphoric. By that time, everybody's bought in and they're making money. And there are no more buyers, or maybe there are, but usually when everybody's bought in, everybody that knows about the market at that time is bought into it. There's no more buyers to have it to continue to go up. And euphoria is a perfect indication that the buyers are all used up. And then we see this fall, right? And that it freaks everybody out. And then we get into a point of complacency. And they're expecting the next rally. Everybody's expecting the next rally because it just happened, right? And then as it falls below, it makes a new low. People get anxious. And they're not sure what's going on. Why is this happening? If it falls lower, people go into denial. They just can't believe it. They think it for sure will come back. And it gets near to the bottom, people start panicking. And after the panic, there's capitulation. They've given up. They've sold. They probably bought somewhere in here where it was, or in the thrill area. And they have now just capitulated and have given up on trading or the particular stock or coin or whatever. And then after they've capitulated, there's anger. They get upset. They're upset with the market. And of course, the market's going to fall down even farther, and they're completely depressed. As it starts coming back up, there's disbelief in it because they got burned so bad, they think all these people are suckers. But it's actually where you start making money. So this is the color code here tells you, the green is what they call the peak of the point of maximum financial risk at this peak. There's high risk up here, financial risk. And red is the maximum financial opportunity right down here, which is true, obviously, because you want to be buying low and selling high. So now let's take a look at Bitcoin back in 2017. Okay, I'm going to blow it up. How about let me do this? Kind of far to the right. But does this not look like Wall Street cheat sheet? Up, down, starts to rally. Up, down, way down, starts to rally. The Wall Street cheat sheet perfectly described this action. This is how the markets work. So where are we now? Where are we now? Let's get rid of. Well, if the Wall Street cheat sheet were true, then this would have gone up here and would have gone down here. But we are actually had two rallies. Now it's starting to go. So I wouldn't be surprised because of the Wall Street cheat sheet. I wouldn't be surprised if the market goes back down. This is a very reasonable outlook. But it doesn't mean that you can't still make profits. Just can't. You just wouldn't necessarily make profits at the, while holding, buying and holding. Yeah, so the new trader, now realizing his lost money and knowing that the trend is his friend, even though he got screwed by that idea, starts to think about how can he find a better way to know what the trend is. So one very popular way of doing that is to look at the highs and lows in the market. For example, you can see that there is a high here. There is a low here. And then a new high up here. Of course, this is all hindsight. But it can be seen close to real time. Low here. See this high, this low, new high. This low comes along here. It's higher than the previous low. We see a new high come along again. So we're definitely in an uptrend because we're seeing higher highs, higher lows. Okay, so this one's a little funky. It seems to be a little bit lower, but then we do make a higher high. We're in an uptrend. Okay, then as we move along, we see the first indication of that something is wrong here. Seeing a low now that is lower than the previous low, but not quite as low as this one. People are not quite convinced yet that we're in a downtrend. We're still, as far as a lot of people are concerned, in an uptrend. Yeah, we have this one anomaly here. This is the point where like, oh, okay, something's going on. Not sure yet. We're still in an uptrend, so people will buy it. Goes up to this high here. And as it starts to go down, people start to recognize, okay, wait a minute. We have a lower low and a lower high. This high being lower than this high. This low being lower than that low. And as the market breaks down below this low here, Now we know for sure we are in a downtrend. But when did that knowledge actually come? That being sure that we're in a downtrend, when did it come? Came and it broke this low here. Came right there. So when was the market actually in a downtrend? The market was actually in a downtrend right here. But according to this method of determining ups and down, it wasn't really known until this point for sure. So it does work to some extent. It does work. You know, we have, you can see higher highs, higher lows as we go along here, right? Higher high, higher low. So it works for a time being, but then when it doesn't work, it takes a little while to know that it doesn't work. So that's one way to determine. So another way that traders determine a trend is that they slap on a moving average. Let's put in moving average. And let's say this moving average makes 50. This means it's looking at the average of the last 50 bars, average price of the last 50 bars. And if we see this average moving up like that, it means we are in an uptrend. And if this average comes down, starts to turn down, it means we're in a downtrend. You'll see also that the market tends to hit these lines here. Line, hit the line, then it goes through the line. It's the line. The moving average is a very popular way to make trades. It's fine when the market is trending well, but when the market is sideways, okay, when the market is sideways, it gives you a indication that we're in an uptrend, probably right around here, for example. And so let's say you buy, you say, okay, we're in an uptrend now, so I want to be buying. So you buy right at this area. And then market starts to indicate that we're in a downtrend right around here or so. So you sell in this area. You buy here, you sell here. Is that a good trading system? How do you know when the market's going to trend or whether it's going to go sideways? Let's say we finally, the 50 moving average is turning around here. Okay. So now you should be buying. Okay, but it didn't tell you that until right here. Well, you missed this entire move. If you want a good trend indicator, I mean like a long-term trend indicator, the 50 moving average it is useful if the market is moving up well, but it's just hopeless when it comes to, you know, choppy markets. And it's so now I would like to talk about what successful traders do, which is something that it takes a while to learn how to do. And that is they know that they must buy low, they must sell high, and that they know that buying low isn't such a bad thing, because they know that the market is more like a spring or more like a rubber band else. They do have these very strong trends every once in a while when there's synchronicity on multiple time frames. But in most cases, you'll see that the market will snap back from an extreme. Like if we see this go down to an extreme here, snaps back. It goes up to an extreme, it snaps back. goes down, it snaps back. All that snapping is the characteristic of the market. And the reason this is happening is because when the market is up in such an extreme, so let me take one step back. So if you notice that the market moves in a um, general upward slope like this, okay? So if the market generally moves in an upward slope, then when you have a slope that looks like this, that's way out of character of the general slope of the market, and it just can't be sustained. These things cannot be sustained. So so the good traders know that when we see something parabolic like this, it looks like it's going straight up. It will snap back down, or when it goes in this direction. Look how fast this thing is moving here. I mean, if the overall slope of the market's like this, and this thing is moving down this fast, I mean, that's just way off, way off. And so what the good traders know is that this is just way too low based on the average movement of how the market is moving. It's at a extreme. So at these points of extreme, there's always a lot of emotion, and it's the emotion that causes people to take action. So if you look at the volume here, this is the highest volume we have seen in the entire history of the market. The highest volume with an extreme low. This is all fear. All fear. This happened to be COVID. So the traders, the traders will see even this level as being low. I mean, not saying that this level. I mean, this level is extremely low. Comparing this was what? This was like about $3,700 when Bitcoin was at 20 at one time. I mean, that's crazy low. So the good traders will see that opportunity and snap it up, uh, in a second. So, but it's hard when the whole world is negative like this. You are fighting the current. The current is like everything is so bad, and everybody is so depressed about what's happening, and you're going the opposite way and saying I'm going to buy. That takes a lot of, I would say, it takes a lot of experience to do that. But that's obviously what you have to do. You have to buy low and you have to sell high. I mean, it's like a no-brainer, mentally, but emotionally, it's extremely hard, especially when you're dealing with money, right? So it's like, okay, you have one part of you that says, obviously, I have to buy low, and then the emotional side of you comes and says, no way am I touching this market, you know. That's my money we're talking about here. So the good traders are the ones that can put that aside and recognize that we're at an extreme, and it's a very good time to buy. It's likewise when it's going almost straight up like this, and up here too. So up here as well, going straight up like that. Now, of course, the market went a little farther, but the reason for that is because we had a very exceptional time period with COVID, and a lot of people looking at the markets and had time to do it, time to and to so there's a lot more eyes on the market. But that's what the good traders are doing. They are knowing that they have to buy low. So here's another situation. Here we made a new high. How do we know? How do we know that is actually low? Here, made a new high. Obviously, that went a lot farther. How do we know that is a new that is a low? That's a really good question. And a lot of professional traders will take these what they call like new highs. So if you look very carefully, this is very interesting. If you look very carefully at market action, and and let's say you're right here. So let's go back and do a replay. I'm going to go right here, go right there. This is what you see in the market at the, and you see that there is a high here and a low here, and you see that the market hit this high and pulled back. Because they said people that were trading in here made all this. This is a pretty good trade here to here. Okay, so what some professional traders do? They know this level. They see this level hit here. They see the level hit here. They see the level hit here, and they say, okay, if it goes higher than this level, then it's going to move up. Definitely going to move up. So they'll wait. Boom. Wait. Boom. See that move right there? Yes, there was a move here to this spot. But if you look if you look at the market in a tighter time frame, like the 15-minute, you will see this thing shoots up. It goes slow, 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 and boom, shoots up beyond this level. Why did that happen? Well, it happened because there are a lot of traders. That's how they trade. They trade new highs. A lot of professional traders are trading new highs. They want to capture as much of the upside as they can. So what happens is the market will move up. You saw, and it moved up almost in a parabolic way, and it moved up to this level, which is this level right here. See that level right there? Move up to that level. They had their sell orders right up there. I mean, these people are dealing with huge amounts of money, serious amounts of money. This kind of move amounts to, tens, hundreds of $1,000s or something. So a bunch of sell orders up there. Boom, shoots the market down. Fine. Another thing that happens is that the traders will recognize that since it made a new high here, it ought to come back down and test this line. Why does that happen? In my opinion, it's because there's a glut of buyers that came in here, and so you've temporarily used up a lot of buyers in the market. So because there's so many orders placed to shoot this thing up that now we have a glut of sellers. And so what happens is that the market tends to move back down to that spot where the buyers start to come in. So what you'll see here, again, they sold at that line, and then you'll see it come back down to the point where the original buyers bought it. Right here. Now a bunch of buyers were placed right in there. And then we see, so that's what some traders do. They'll wait for the market to come back down to the place where people shot it up in the first place. And then they'll take their buy orders right here. And then see that it pops back up, tries it again, pop, boom, make a new high again, off to the races. So this is actually a pretty successful strategy, and I know of a lot of traders that use this strategy. They wait for the new high and they have it wait for it to come back down, and they buy at the spot where I started. It continues to go up. So that's what traders, they know these strategies. They know these fundamental actions of how the market works. So I covered these extreme points and also this typical market action and activity. So that's all for this video. Thanks very much for watching. I hope you learned something. And if you enjoyed this content, please like and subscribe. And in my next video, I'll be talking about the stochastics oscillator and how it can help you make trades. Thank you.